Ladies and gentlemen, good day and welcome to Shera Energy Limited H2 FY24 Results Conference Call hosted by Kirin Advisors Private Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Yadav from Kirin Advisors Private Limited. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Shera Energy Limited. From the management side, we have Mr. Sheikh Naseem, Chairman and Managing Director, Ms. Jyoti Goyal, Company Secretary and Compliance Officer. Now I hand over the call to Ms. Jyoti Goyal. Over to you, ma'am.
Good afternoon, everyone, and welcome to the second half conference call of Shera Energy Limited. It's a pleasure to have each of you here today as we review our performance for H2 and FY24 and outline our future outlook. As we concluded the second half, our total income mirrored the H2 figure at rupees 491.91 crores. We recorded an EBITDA of rupees 27 crores. The PAT for H2 FY24 was rupees 8 crores. Shera Energy Limited, headquartered in Jaipur, specializes in non-ferrous metal production, focusing on copper, aluminium, and brass winding wires and strips. With ISO certification, we excel in paper insulation for transformers, motors, and electrical panels. Our integrated approach includes strategic investment in subsidiaries like Rajpurana Industries Limited and Shera Zambia Limited, enabling efficient recycling and energy production. We are the only Indian company manufacturing all the three metals under one roof, ensuring quality, customer satisfaction, and innovation. Shera Energy's revenue during H2 FY24 was driven by a robust performance, a testament to our commitment to excellence. Maintaining a commendable level of capacity utilization during H2 FY24, our plants operated at an average capacity utilization of around 63.89% on an installed capacity of 37,000 plus MTPA. In line with our global expansion strategy, I am glad to announce that we successfully completed sale of our investment in Shera Infra Power Private Limited. These funds generated from this transaction is allocated towards the establishment of our new subsidiary in Zambia, Shera Zambia Limited. This strategic expansion initiative is poised to enhance our export capabilities and augment our existing production capacity by 10%. Thereby facilitating increased business prospects in export. We are happy to mark a significant milestone in our international footprint with establishment of Shera Zambia Limited in Central Africa. This venture will enable us to manufacture winding wire and cables for Zambia and neighboring nations, fostering economic growth and technological advancement across the region. Moreover, I am proud to share that Shera Energy share price has surpassed the rupees 200 mark, representing a remarkable increase of 256% from the IPO price in just 14 months after the listing. Now let me take you through company's financial performance during H2 and FY24. In the second half of FY 2024, our company demonstrated impressive growth across key financial metrics, underscoring our continued momentum and resilience. Total revenue surged by 37.33% compared to the same period last year, reaching rupees 491.91 crores, indicative of strong market demand and effective execution of our business strategies. This revenue growth was complemented by a substantial increase in EBITDA, rising by 36.28%, half on half to rupees 27.27. Our profitability significantly improved, with PAT soaring by 63.77% HOH to rupees 7.91 crore. Furthermore, EPS saw remarkable growth, surging by 65.92% HOH to rupees 2.97, reflecting our commitment to delivering value through sustained operational excellence and prudent financial management. In FY24, our total revenue surged by an impressive 25.59% year-on-year to reach rupees 876.32 crore, reflecting the effectiveness of our revenue-generating strategy. We also witnessed a substantial improvement in EBITDA, which soared by 31.44% year-on-year to rupees 52.55 crore, accompanied by a noteworthy expansion in EBITDA margin to 6%. This enhanced operational efficiency translated into a remarkable increase in PAT by 54.23% year-on-year to rupees 14.05 crore, resulting in a PAT margin of 1.60%. Moreover, our EPS surged by an impressive 39.68% year-on-year to rupees 5.21, reflecting a strong financial health and promising outlook for continued growth and profitability. With this, I would like to conclude my remarks, and we are now ready to take questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and one to ask questions. The first question is from the line of Yashwant from Cogent Investor. Please go ahead.
Yeah, thank you, ma'am. It's not Yashwant, it is Yashwanti. Good evening, good noon, sir. So I just wanted to understand more of your Zambian entity. What is the investment? What is the plan for it? Which countries you will be serving it? And what kind of a revenue target we can see from this Zambian operation? This is one.
Good afternoon, friend. I'd like to tell all my investors that the company has already started investing into Zambia. First level of investment has already moved in there, and with 200,000 US dollars. That is amounting to rupees 2 crores in INR. So second level of investment is expected to go in a month's time, and hopefully within 3 to 4 months we'll be in position to invest roughly 8 crores of Indian rupee. And with this investment, the company is going to start sourcing the scrap material and make the ingots out of them, and these ingots will be exported to India. So this is the planning that we are having, and I expect the revenues from this operation will start by September this financial year.
Okay. So this will be exported to India and not to the neighboring countries and to the Zambian market. That is what
starting quantities, we are expecting to start it with a tune of roughly 100 to 150 tons per month. And since this material is a raw material to our parent company here in India, so first we will cater the requirement of our parent company. And when we are exceeding the quantities that is required by us, will be marketed to other customers in India and will be exported to maybe China, Malaysia, Thailand. These are our target buyers.
So the 150 metric ton will be exported to India from September, October onward. That is what you are saying?
Yes. Even before the things will start happening. By end of first quarter, we will complete all our registration with the Zambian authorities, and we have already are in line with making some agreement with a Chinese industrial area, that is Chambeshi in Zambia, where that is a free trade zone area where we are entitled to import duty free goods and export it directly from there. without impacting any taxes onto the local Zambian land. So this is the first phase of investment that we are going to do. Second will be into the Zambian mainland, where we will be melting the local scraps available there and exporting it directly from there.
Okay. So initially you will be importing scrap from China, making it.
No, not from China. No. We will be importing it from the neighboring countries like DRC Congo, Democratic Republic of Congo, other countries, neighboring countries who are making the copper ingots, copper cathodes. They will be our buyer, and that will be a trading activity starting from Chambeshi. That's a special economic zone area where only a import-export business can happen. It is similar to like the things that happen into Dubai. So it will be we will be commencing our trading operations immediately. And meanwhile, the machines are also going from India to Zambia. It will take 3 months from now to get the machines into Zambia, and 2 months we need for installation and commissioning. So by end of September, we will be having our products from our production lines.
Okay. And so thank you so much for the detailed explanation. And so my next question is regarding the financial which you posted for the second half and the full year. So we are going impressively on the top line, the 37% on the H2 and 26% on the full year basis. Even the margin has been expanded around more than 30%. But if you compare with the EBITDA margin, we are still around 5%, 6%, and which takes down to the bottom line is almost 1%. So what kind of strategies do you have to see this in enhancement in this EBITDA margin so that will bring something on the table for investors?
Okay. I should bring everyone into the notice that presently we deal purely into the metals. The metal EBITDA margins are in the range of industry trend is in the range of 5 to 6%, and the PAT margins are in the range of 1 to 2%. And this is the industry trend pan-India, not only pan-India, it's the world over. Now we are focusing more into adding the value-added product in our production line. In the same line, we have started doing some alloy business that has resulted to increase our EBITDA margins. And that you can see the profit margins although is increasing from 1.31 PAT margins to 1.60. This increment of 0.3% is due to our addition of alloyed products. So company is constantly working on that, and recently we have also planned to start our cable operations for the domestic market. That will also give a better EBITDA margin, and that will help the company to take its EBITDA margin in double digits in 2 years from now. So we are extremely focused to bring our EBITDA margins over double digits and the PAT margins in the range of 3 to 5%.
Okay. So on this, I have one more question, sir. So what is normally an EBITDA margin on the cable business? This is one. And with the start of this cable business, its contribution to how it will be?
In the cable margin, the EBITDA, normal EBITDA is in the range of 15 to 18%, and the PAT margins are in the range of 5 to 8%. So adding these to our production line, we will be adding around 20 to 25% of our sale contribution will come through these two products. So that will help to scale up our EBITDA to a double-digit figure, a nearing double-digit figure, and our PAT lines in the range of 3 to 5%.
And when the commencement of this project will start?
We are almost done with our building, and flooring work is in process. And by end of this month, I expect the flooring work will be done. By end of June, I expect the machinery installation and commissioning will be done, and trial production will start happening in the month of July. Post July, we are going to apply for Bureau of Standards BIS license, and it will take 1 or 2 months time for them to award us the license for the commercial production. So I expect we can see these products coming into our basket by end of September.
Okay, so mainly we can see some revenue coming from the second half of the current.
Definitely. Second half, you will find substantial revenues coming from the cable division also.
And out of the fundraise, how much has been invested till date in this cable operator and in Zambian operation?
In terms of value?
Yeah, in terms of the value, out of the fund
In
base.
terms of value, Zambian, we have initially invested 2 crores till now, and by September, our investment will be around 8 to 10 crores.
Okay.
And for the cable, we have invested roughly 3 to 4 crores till now, and by September, the total investment will be 7 to 8 crores.
Okay. And sir, for this cable business, we will start talking to the customer post approval for this all this certification which we have, or we are already initiated process?
We have initiated our process because some of our customers, those who are presently dealing with us into alert business, they also need cables, and we are in dialogue with them. Hopefully, those dialogues will convert into orders very soon. But our supply can commence only after we have BIS license.
Okay. That is really great.
Yeah, but the customers are well known to us. The market is very much known to us. We don't have to struggle more into the market because many OEMs are our regular customers for our alert-based products like process. They need harness cable, and there are many signaling cables they require for their equipment. So against their willingness to buy from us, the initiative was taken by us.
Okay, so basically you're expanding your product offerings to the existing customers.
Yes. The customer bank is already there, madam.
Okay, thank you so much, sir, and wish you all the best. Enjoy that.
Thank you, madam.
Thank you. The next question is from the line of Mithun Mehti from Capital. Please go ahead.
Good afternoon, sir. I wanted to understand in terms of your Zambian operation, the gold refinery which you have proposed over there. So are we gonna? It's just an ancillary which is gonna come out with the copper thing, or are you gonna take out any specific unit only for the gold refinery?
Gold refinery process is a slightly time-taking job since you have to get the mines in possession from the government. We have already applied with the government for some allocate land, and our request is under process with the government of Zambia. And I expect by 7 to 8 months' time, they will allot us a suitable size land to excavate and extract the gold from there. But the revenues from this operation will come only in next year. I don't expect any revenues coming from gold business in this financial year. It's a time-taking job. It does not happen like you install a factory and start the production. It is not like that, sir. You have to apply for the land, and then the clearance from Environment Ministry, the pollution. There are a lot of clearances required for mining. So we are in process of following those things, and it takes 7 to 8 months time to get all the requisite clearance. Then only we can put up our machinery for excavation and recovery of the gold from the ores. So in short term, I will say that revenue, the impact of that revenue is not going to come in the company.
And are we going to invest, as in they will raise some more capital for investing in this particular facility? Or?
No. The capital requirement in this project is not very huge. The only that is required is allocation of land. That is some time-taking job, and then fetching the clearances. After everything is done, then the investment required from our side initial will be roughly 5 to 7 crores into the equipments for the gold refining project. So investment into capex is not going to be very large.
Okay. My understanding is the gold refinery unit does not give you high margins, as in the margins are in single digits, initial single digits. But the asset turnover ratio, as in terms of, it's going to be quite high. So are we going to expect better return on capital employed in coming days from this unit, or it's going to be similar to what we have structured right now?
Sir, gold refinery, it is all based on exploration. If the exploration work is not proper, then the recovery and revenue generation from the operations are very less. But if you get, there are some reefs, if you know those things, I can tell you in terms of geology. There are some reefs moving in the land. Inside the land, those reefs, if you are able to track and able to explore the reefs, the revenues are abnormally high. But if you're not focusing on exploration more and just start the production without exploration, then what you are quoting is correct. But if you are doing your homework in a proper way, you are investing time into exploration and investing money into exploration, then the returns are much higher than expected.
Thank you. That answers my question. Thank you, sir, for giving me this opportunity for consult.
Thank you, sir.
Thank you. The next question is from the line of Jay Shah from Arihant Traders. Please go ahead.
Good afternoon, management. My first question is, what estimate profit and revenue you would like to give to your investors?
For which FY? For next FY?
Yes.
For FY25?
Yes.
With the present setup and the expansions that we are considering, I am expecting a revenue of roughly 1100 to 1200 CR and with a better PAT of roughly 2 to 2.5 plus.
Okay. And what are the growth drivers for your business growth?
Pardon?
What are your growth drivers for your business growth? Like how will you grow your business?
Like you see, 900 approximately we have done this financial year. So there will be a natural growth of 10%. So with 900 we will be easily doing around 1000 for this FY. And going ahead with the addition of product line like into Zambia and into India for the cable division. So bare minimum expectation that I expect to contribute by our new expansion is around 200 CR. So with that figure, I can foresee the company is going to achieve around 1200 easily. So that is my expectation and that's my target for this FY25.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Pallavi Nadar from HNI. Please go ahead. Ms. Pallavi, you are not audible. Can you please unmute your line from your end?
Why product diversification in winding wires and cables?
Yeah. Madam, you are not audible.
Why product diversification in winding wires and cables?
What do you mean by that? I'm not able to get your question clearly. You can talk me in Hindi as well. You can.
Why is the company diversifying in winding wires and cables?
Why is the company diversifying? Oh. We are planning to add more value-added products in our production line since the company is now already established into metal business. So we are diversifying for some quantity of our operations into more value-added products.
Okay, sir.
Thank you.
Thank you. The next question is from the line of Tara, who is an individual investor. Please go ahead.
Hello?
Yes, ma'am.
Yes.
You're audible.
Yeah, can you hear me?
Yes.
Yes. Congratulations, sir. Just wanted to know a brief about your Zambian subsidiary. Do we have production capacity or we are trading in, winding wires and cables? So if the production, is producing, what is the install capacity and how much we are utilizing?
Madam, since I have already apprised all the investors, it's a new area of operation I cannot start putting up all the money and making the production from the day one. So it's a new country, it's a new place that we have to work. I'm moving very cautiously, and I'm starting my business with a small operation of manufacturing cables there in Zambia and trading of scraps and cathodes to India. So this is our target for the first year. And as this is a business starts moving in a good way, then we will enter into recycling of non-ferrous metal scraps available into the local country, and those things will be exported to major other East Asian countries. So this is our plan for the next year. So as the things stabilize into the
Okay. So what would be our contribution in export? And when we can see the growth in
I expect a business of roughly 200 CR for this financial year from Zambia. And the next financial year, my target will be not less than 500 to 700 CR.
Okay, sir. Thank you.
Yes. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Mayuk Mahapatra, who is an individual investor. Please go ahead.
Hi, sir. Good afternoon. First of all,
Sorry to interrupt you. There is a lot of background noise from your end.
Hello.
Sir, you are driving, I presume.
Yeah.
Yes.
Okay, so actually just want to know one quick question. What is the plan to improve our OPM? I am seeing the OPM is like 5 to 6% range. Is there any plan to increase the OPM to double digits?
Sir, if you are joining this conference call since the start, I have already narrated that we are adding the value-added products in our production line, and you will see the results coming into these from these products by second quarter of this year, and they will help us to go close to double digit for this financial year, and next year we will be excelling over double digits.
Okay, thanks. And one more question. For the cable business, are you targeting South Indian customer or only North Indian customer?
Sir, it is not targeting. Initially, we will start with NCR, the area near the New Delhi area, and then we will go into the Coimbatore market. Coimbatore is a big hub for the cable requirement. We are in dialogue with those pump manufacturers also, and hopefully as our sample gets approved, gets in production, I am confident that our sample will be approved and we'll be starting business with the Coimbatore market as well.
Okay, thanks. That's all from my side.
Thank you.
Thank you. The next question is from the line of Mahesh Seth, who is an individual investor. Please go ahead.
Hello.
Yes, please.
Good afternoon, sir.
Good afternoon.
Sir, I just wanted to ask that with such low profit margin, when the investors can expect rewards from your company, and what are your vision or goals for next 3 to 5 years?
Sir, very soon we will be in position to start distributing the dividends to our investors, and as we touch the double-digit mark into our EBITDA margins and PAT growth of more 3 to 5%, then company will be aiming to give dividends to our investors.
Okay, sir. Thank you.
Thank you.
Thank you.
Yeah.
The next question is from the line of Amit Kapoor, who is an individual investor. Please go ahead. Mr. Amit, can you please unmute your line from your end? Mr. Amit, we are not able to hear you. The line from Mr. Amit has been disconnected. We will move on to the next question. The next question is from the line of Rajesh Swaminathan from Gaurika Investec. Please go ahead.
Hi. Sorry, I was missed. Any updates on the bullet shells project?
Bullet shell project is already on, sir. We have already started the business, And this is one of the reasons that the PAT margins of this financial year has improved by 0.3%. So this business is picking up smoothly, and we expect this year we will be doing better than we did last year.
Right. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask question. The next question is from the line of Amit Kapoor, who is an individual investor. Please go ahead.
Yeah, can you hear me now?
Yes, sir.
Yes.
Okay, great. Sorry, I got disconnected earlier. So I just had one question. So previously you had published your Q3 results, and this time it was just half yearly rather than quarter on quarter. So I just compared the numbers, and it looks like we actually had a good uptake in the sales number from quarter on quarter, but there was expenses also saw a huge jump. As a result, there was operating margin and profit before tax and net profit all dropped significantly on quarter basis. Could you just give some color on why that happened and what's your basically the vision for?
Some expenses are done on a year-to-year basis, so that reflects more into the quarter end, and the impact because these are all audited figures. And quarter-to-quarter basis, we don't accumulate some of the expenses that are in the nature of being put in the balance sheet on an annual basis. So that is the only reason that it impacts. Otherwise, there is no gap into the operating margins on quarter-to-quarter basis.
Right. So you're expecting basically the Q1 of this fiscal basically will bounce back essentially.
Yes, sir. Yes, sir.
All right. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Priyanka Chavan, who is an individual investor. Please go ahead.
Yes, thank you for giving me the opportunity. My question is, what is the current capacity and capacity utilization?
Madam, installed capacity of the company is roughly 35 to 37,000 metric ton per year. And what we have done until now is roughly 65% of our capacities. So still we have a space of pushing for more than 15 to 20% in production line and utilize our capacities more.
Okay. Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Yashwanti from Cogent Company. Please go ahead.
Yeah, this is again a financial question. So we have seen that other expenses have grown substantially. So what is the reason of the company and what are the strategies to control them?
Madam, other expenses have not gone substantially. If you elaborate, it looks like more as compared to last year. But you see, as compared to last year, the operations have also gone up. Since the other expenses contribute to more into the job work part. So the company was forced to do some job work from the outside agencies to give push to our operations. So the expenses were because of that. And this year we are focusing to make a minor investments to minimize our job work cushions that we were paying to the other parties. So this call we are going to take this year. That will help us to reduce our other expenses.
And the last question, what is our current working capital cycle?
It is in the range of 45 days around.
Okay. Okay, sir. Thank you so much. And we should.
Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask questions. A reminder to all participants that you may press star and one to ask questions. As there are no further questions from the participants, I now hand the conference over to Mr. Abhishek Yadav for closing comments. Please go ahead, sir.
Thank you. Thank you everyone for joining the conference call of Shera Energy Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call. Thank you.
I thank you everyone, all the investors, and I congratulate everyone for your trust The company is committed for better and better performance, and we will be putting more into our figures than into words. Thank you, everyone.
On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.